A Year for Accumulation with Monex, featuring Managing Partner of CPM Group and author of the Monex Precious Metals Market Outlook Report, Jeffrey Christian.
Hello, my name is Sean Brasney. I'm here with Jeffrey Christian, Managing Director of CPM Group and author of our Year for Accumulation report. I've been watching the dollar in this long uptrend that it's been in. Seems to have taken a little bit of a breather here lately. Is there something that you see moving forward with the dollar that you can give us some hints on?
Well, we have a reputation of being, people say that we're more bullish on the dollar than others, and we always say, no, it's not that we're more bullish on the dollar, we're just less bearish on the dollar than we are with every other currency, because the currency markets are reciprocals. And so for you to be bearish on the dollar, you have to be bullish on the euro or the Canadian dollar or the Australian dollar, and that's a lot harder to do. The U.S. economy has a lot going for it. It's stronger right now. It has more capacity to grow and a higher productivity rates on a historic basis. We have a tremendous amount of economic power that says people want to invest in the United States. You also see people investing in the U.S. equity market, which is about 46% of global equity markets and has been the best performing markets. And you see people investing heavily in U.S. Companies, private companies, and real estate. All of that takes dollars, and that puts upward pressure on the dollar. Over the last few weeks, what you saw was with the Trump ongoing trade war with China, followed by the Mexican tariff threats, what you saw was a lot of foreign investors pulling back from investing in the United States. As soon as that happened, the dollar weakened and the U.S. equity market weakened. Now we're pulling back from that, and I think it could go forward. Our outlook for the dollar is wholly dependent on what happens with the Trump administration. If it maintains its powder and allows the U.S. economy and U.S. stock market to move forward, the dollar will probably regain its footing and move somewhat higher once more. But if we continue to have these political shocks to the economic system, the dollar is going to remain under downward pressure. So our view is it kind of moves sideways in a more volatile fashion, simply because investors are really getting worried about having investments in the United States.
You had mentioned the summer doldrums. We've actually had some pretty good volatility for the summer here, at least lately, and we're not even to our season that we're kind of used to kicking off a little closer to the fall. Is there anything that you can give us as far as some hints into the future as we come out of the summer months and head into the fall for the metals?
Sure. I'll make several points. First off, we still think that you'll see summer doldrums, and we wouldn't be surprised to see the gold price come off a little bit more, especially if the administration stays quiet. I think 1270 is that we could see 1270 again. It's quite possible. I'm not sure that we will see it. But I do think that we're in the summer period where you could see some lower gold prices for a time. That said, seasonality is always trumped by actual events in the market. And if you're in a situation, as we are right now, where you have volatile political, economic, and financial conditions, those will override the seasonal weakness that you can see. And we saw this, for example, in August of 2007. In August of 2007, the housing market and the mortgage market started to have its problems. And everybody had gone into July and August of 2007 thinking that we'd go into the summer doldrums. And instead, what we saw was the beginning of the big upward move in gold prices. Gold prices were probably around $700 in August of 2007. They were $1,000 by March of 2008 when Bear Stearns went bust. So I think that what we're looking for is, there is the potential for that summer doldrum. And yes, we will be looking for investors to come back into the market in August and September, and jewelers to come back into the market in September and October. But we understand that things could change, and we might not see that period of summer doldrums. We might have to cancel some trips to the beach in order to spend some time at our computer screens, because the markets are a lot more volatile and active than we would have thought they would be in August otherwise.
Please give Monex a call today. Talk to our account representatives and ask for your free Year for Accumulation report done by Jeffrey Christian and the CPM Group.